thank you for coming, and want to sincerely thank you for sparing the time to come and join us as we have this investor briefing this morning. We are proud and happy as a team for the results that we've been able to post in the past financial year. And this has been achieved with the collaboration of most of you who are in this room. You can have a team of angels in the board, but if you do not have a serious CEO to execute and to lead a team that executes that strategy will be eaten for breakfast. That's what they tell us in business school. So we want to invite the team leader who has been nurtured and trained by Albert Mugo, and now when she appeared before the board thought it fit that she'll be able to lead the team in the coming years. And so they've given her the position of managing director. She's still acting while a few I's have not been dotted, a few T's have not been crossed, but we believe that will be done shortly. Then she'll be the substantive MD, and she has a team, and I want her to come now, introduce her team, and present the accounts. Welcome, Rebecca Miano.
Good morning, ladies and gentlemen, good morning. Looks like full house or what? It is. I must say, it is indeed a great pleasure to have all of you here today, and to say that we truly appreciate that every time we call on you, you answer and you really support our events. Even when we call you very early in the morning, you wake up earlier than usual not to miss our events. Today we celebrate yet another milestone when we finish 2017 strong. And our profit after tax, as you may already know, grew by 34% last year. The operating environment has not been very friendly, but that notwithstanding, the KenGen genius, has continued to demonstrate its resilience in these unpredictable economic and bad weather times. May I also recognize those who have mentored us, mentored me, and though the chairman had introduced Mr. Eddie Njoroge, we introduce you again. Thank you. And Engineer Albert Mugo, this is a man who over time at KenGen has built the profile. He has performed well, received accolades. And ladies and gentlemen, join me in appreciating a mentor, a true leader, and the energy manager of the year 2016, Albert Mugo. We wish Eddie Njoroge and Albert Mugo all the best in their endeavors. KenGen is the only company that pulls along the previous CEOs. Others disappear, we never see them. Thank you, gentlemen. So we wish you all the best. I know you all remember the rights issue, whose new shares started trading in July 2016. That rights issue achieved 100% subscription following the issuance of the remaining 351 million shares to PIC, and I think PIC is represented today, PIC of South Africa. Very soon we shall see the fruits of the rights issue in the projects that we shall deliver. We have a short presentation that we shall take you through, just showing our performance, our strategy, and a very short promise that we have for you this morning. The first slide is just a story of hope, especially for the country, and it shows that Kenya was among the top in global GDP growth. And this is also confirmed by how the currencies have actually behaved over the last few months. The dollar has been quite stable. The yen hasn't had too much of movement, moving between 93 to 91, and also the euro between 123 and 121. Then I'll take you through the institutional arrangement in the energy sector. Of course, we have the Ministry of Energy and Petroleum in charge of policy. We have ERC. ERC regulates the industry. The Energy Tribunal, when guys in the sector cannot agree, and even with all the other users of electricity, they have a place to take their disputes. And then we have the electricity value chain, starting with generation. And KenGen does business in the generation space together with IPPs, supported by GDC in terms of steam. And we also know that the nuclear board is doing some work on nuclear. This is supported by investments in the transmission space, about 75,350 kilometers, and that is Kenya Power and Ketraco. And then on the distribution side, we have Kenya Power Rural Electrification Authority have an investment of about 139,650 kilometers. And all this effort has so far resulted in an access of 68% in the country, access to electricity. And then Kenya's installed and output capacity over the last 6 years, a steady growth of about 7%, 1691 megawatts in 2012, and currently 2370 in 2017. And the unit sales in gigawatt hours over the same period, 2012, about 7.67. And then in 2017, we have 10,205 units. And that's the growth. And then the Kenya, the sector, the demand, peak demand, we have seen growth there from 2013, from 1354 megawatts to 1710. And going forward to 2018, we anticipate there will be a good opportunity for growth under the demand creation program that is currently going on under the Ministry of Energy and in the sector. And so in the medium term, we see that there will be demand for our product. And the customer growth, we see that currently we have about 6.8 million, up from 2.04 in 2012. And this has been under the last mile project that has seen growth. And the off-taker tells us there will be additional about 300 million customers by 2020. Some new developments in the power sector, the energy bill. We may be aware that this bill was discussed. It is currently pending the processes. And this bill, when it is enacted, will create market for generators. And it will also expand the business models. The power infrastructure upgrades, we have seen those. This has resulted in improved power supply quality and reliability. We also have the draft national geothermal strategy under preparation. And when this document is ready, it will guide investments in the geothermal power generation. The feed-in tariff policy is currently under review, and we believe it's a good thing. KenGen has some projects under the feed-in policy, and we await the review. There's also the draft renewable energy auction policy under the auspices of ERC that is under preparation. And we want to share with you our market position and mix as at 30th June 2017. And our installed capacity share was at 69%, KenGen, the orange bit, and 31% independent power producers. In terms of sales, all the power consumed in the country, 74% was by KenGen and 26% by IPPs. And on the right, the KenGen energy mix, hydro at 50%, geothermal 33%, diesel and gas 16%, and some wind there to top up our graph at 1%. Our installed capacity, still the generation mix. In 2017, we decommissioned 9 megawatts of thermal, that is Garissa and Lamu, that were decommissioned because the transmission line was then ready and those areas were included in the national grid. Then we had some geothermal, 10 megawatts commissioned in the year, and that then left our installed capacity at 1631 because of the decommissioning. Our strategic aspirations as KenGen will be summarized by 3 clear points. 1, we aspire to increase capacity, and we shall increase this by 2,500 megawatts. We shall remain relevant as a huge market player, even by 2025, and we are largely focusing on geothermal. The second aspiration, value creation. We aspire to provide adequate return to shareholders, and we are targeting a ROIC of about 10%. And then we aspire to lower tariffs. And this will be achieved by profitably supplying cheaper renewable energy in this country, and it will be good for the economy. And then our path, we are still traveling the journey of good to great that was started by the great men we introduced earlier. And this is our simple story. We want to be a great company, sustainable from generation to generation. In our strategy, we have 3 horizons. Horizon 1 was initially 2008 to 2012. And we delivered over 325 megawatts. That was extended to 2015. We were able to deliver another 375 megawatts. And then at that point, we revamped our Horizon 2 plan and extended it to cover the period 2016 to 2025. And we want to create sustainable power growth in Kenya. We wish to deliver, we are determined to deliver about 2,500 megawatts. And we would also want to diversify our business. Horizon 3, over the next 10 years, over 10 years, we shall continue exploring expansion opportunities and drive expansion beyond Kenya, establish a strong African footprint. And this is the story we love to tell, because in the medium term, we target to add about 721 megawatts. That's by 2020. So in 2016-2017 financial year, we had some progress in our projects pipeline. We have Olkaria 6, 140 megawatts. That is the PPP project. And tendering for a joint venture partner is under preparation. Olkaria 5, a lot of strides. We achieved financial close. Drilling was completed, and we got sufficient steam. Ground was broken in March 2017. Construction is ongoing. Olkaria 1, Unit 6, financing has been committed. Drilling is complete. We are now procuring a contractor. Olkaria 1, rehabilitation. The PPA for the old plant was extended for 3 years to allow preparation for the rehab. And the government of Japan has pledged funding, and the plant will undergo rehabilitation in a phased approach. As we go forward, we recognize that we have strategic risks that we are continuously managing. One of them is competition. Not a very bad risk, keeps people on their toes, and we have some mitigation strategies. Community expectation. This has been quite a risk, but we have formed stakeholder committees, and we are continuously engaging with communities to be able to partner with them. The legal challenges. We are perfecting our processes and enhancing policies to be able to cope with the challenging legal environment. And on climate and the weather, we are pursuing the geothermal strategy aggressively to mitigate the low hydrology. And as you may all know, this year we've had the worst drought, and our dams have reached the lowest level. But we are grateful that the geothermal has been able to mitigate that, and the effect of the drought has hardly been felt in the country. So ladies and gentlemen, I will now invite the mathematician in the room to crunch the numbers for us as we continue. Welcome, John. Thank you.
Just give your neighbor a smile, tell them what a wonderful morning. History is being made. It's just begun. I think in the history of our company is the first time that we have had a lady CEO stand before us. Why don't you just clap? It's my pleasure this morning again to stand before this wonderful and auspicious team and investors and partners to share with us how our company is doing. We continue to express a dream and a promise to all of us as members and owners of this company. Being with the lady, she didn't want to look at the red numbers. So I've been given the opportunity to share the red numbers on top. But it's quite a wonderful story. The story of KenGen still remains the story of growth, still remains the story of profitability. And what this tells us is that the revenue was slightly behind our plan, and there is a reason why we are here where we are today. The main reason why revenue is down by 8% are mainly two reasons. Number one is arrears on steam revenue, which we received in 2016, but which this year we didn't receive because it was arrears. And also, last year, we did mention that we were focusing on alternative business under KenGen C, and we continue to drive that promise. But unfortunately, in the year, we were short by around 1.5 billion of other revenue from drilling. And this is mainly because some of the customers that we are targeting to drive our drilling business face certain challenges. But we believe that that will improve as we move on. Number two, Chair, and all investors that are present, is about the operating profit, which dropped slightly, and those are driven mainly by those reasons. But Looking at the bottom line, profit before tax is 2% up. That driven mainly by growth in capacity and also profit after tax because of the some gains that we got as a result of investment allowance. I will now take us to some of the details. Revenue, as I've mentioned, revenue dropped. Last year we had 38.6 billion, but this year we have 35.4 billion. And that drop is mainly two numbers. 1.6 billion because of steam arrears last year, and 1.5 billion other revenue which was coming from drilling. That comes around 3.1 billion that we were not able to get because we had some contract, for example, for the drilling, but it could not be realized just because there were some difficulties that the customer and the target market was facing. But we believe that once that's sorted out, and Madam Rebecca will be coming later to expound, we still believe that other business will continue to grow, and we are focusing ourselves on that. In terms of how does our business model work? Now, our business model works in terms of what additional capacity we put. We are actually a project company that builds power plants and leases them out. So if we don't put a new power plant, we don't get a lot of growth in our revenue. But there's side of it, which is what we call the energy, the units that kilowatt hours that are sold here. And that is affected a bit by environmental issues that Madam Rebecca has talked about. So in this presentation, you can see two items here. One is the capacity revenue. And the capacity revenue, sorry, I can't see very well, but I can see from I hope you can see. The capacity revenue grew marginally by 2%. And that means that we are still able to run our plants and meet our load factors and our capacity commitments. Because we have thresholds that we must avail our plants, our availability factors to avail the plants. Now, the growth that you're seeing is because we're able to put 10 megawatts, maintain those power plants at operational level and meet our availability factors. Now, on the other side, you're seeing the energy revenue. Now, the energy revenue is the unit sales, what we are able to dispatch from our power plants. And that is a function of two numbers, two big numbers. Number one is our load factors, which is the units that comes from our existing power plants, and any additional. Now, that number suffered a bit because of two reasons. The energy revenue suffered, one, because there was a bit of hydrology challenges in the Eastern Cascade. We all know that Masinga area, going all the way to Gitaru, the Seven Forks, there has been major drought. And when that drought hit us, it kind of curtailed what we could dispatch out of the hydro power plant. But we also had another problem that came at the same time. And this was a bit of transmission challenges out of Olkaria. So even though at that time, investors, we had ability to dispatch power out of Olkaria, we were not able, particularly at the early part of the year, to dispatch that power plant. So we are constrained, and that's we've said some 173 million we could not get. But the good news is the Olkaria Suswa line going all the way to Mombasa is now operational, is functional. It came online, albeit towards the tail end of the year, and therefore we are now able to dispatch. So that contributed to the decline. And you can see that on the bottom line, hydro decreased from 1.5 revenue, energy revenue from hydro decreased from 1.5 billion to 1 billion. Geothermal did not increase as much, just also was almost flat, 5.1 to 5.17. But you can see something that happened in the gray area, and that is the thermal. So quickly, our KPEV plant had to kick in, and a bit of enhanced dispatch came from thermal plants, which helped to mitigate the challenge. And also, you can see that the revenue from wind increased. So the Ngong wind was also able to help us mitigate that. But as I've said, the good story going forward is that the transmission and distribution line is now fine. So we do expect that our dispatch out of Olkaria will be. And again, when the rains improve towards the end of the year, all those factors are positive to add to our growth going forward. We are also now aware that the drilling that we were expecting, some of our customers, the customer that we had targeted at that time, has also made some progress in terms with their own investors, and therefore we'll be able to revisit that area and improve our business. This is just a breakdown of really, if you look at operating profit, 2016 we started at 16.2, we closed at 13.7, and we are explaining the hydrology and evacuation issues. Steam revenue arrears affected us. Commercial drilling also affected us. The reds are what brought us down. The green took us up a bit. We had other income that helped. Then, of course, also we have to prepare ourselves in terms of growth. As we put in capacity, we must plan for the staffing and all the other development costs that are required to put that in place. So that took a bit of money. There was some provision there, doubtful provision. Particularly, I must be honest that was related again to the drilling revenue that we're expecting. That became a bit more, we had to make provision for prudence purposes on it. And then some of our plants became fully depreciated. We also decommissioned Garissa, Lamu, and that was reduced the depreciation. So that's more positive. So all in all, we ended at 13.7 billion from 16.2. Some of the positives, interest income, and this basically treasury management of the rights issue cash. We did receive rights issue cash and targeted to help us in implementing some of our geothermal projects. Our contribution towards Olkaria 5, our contribution towards Olkaria 1 Unit 6, and a bit of finishing up on the wellheads. And because there was a bit of a timing beginning delay, so we have had to treasury manage that, and that helps in terms of helping with the interest income as we invest that funding. Effective tax rate again dropped a bit because of the implementation of the wellhead units that we did, and we benefit from investment allowance. So, and in terms of earnings per share, there's a growth from 1.37 to 1.43 for the year. Cash, this is really in terms of cash where we are. We sit close with cash, and as you're aware, we did obtain slightly above 8 billion from the rights issue, and at the end of the year, we are still managing that, as I've mentioned. But subsequent, we know that now Olkaria 5 has the groundbreaking took place and works are ongoing. There's great activity. We are very positive. We want to thank all our financiers, and they're in the room here. I think the people who make me feel very nice, I think it's good just to ask all our financiers to stand up. All our financiers, bankers, and development financial institution, AFD, JICA, we had the world. So all, I think things will not happen if we don't have this team here. They are the silent supporters behind the scene that puts the dollar when we need it. A very big thank you to all of you. Thank you so much. So our colleagues from JICA, they are funding Olkaria 5. They have given us 376 billion yen. Also Olkaria 1 Unit 6, they gave us the pledge. So Olkaria 126 additional 70 megawatts is going on, and it's just awesome. Jenga and Madam, just all the things you're doing. AFD of France are committed themselves to the male wind. I must say our project is very challenging. Arthur Honore and the team, together with KFW, have money ready. They're asking me, John, when do you take it? But we're still dealing with some issues locally here as Kenyans, which is delaying that. So thank you so much, Arthur and the team. EIB, KFW, World Bank are giving us some offers also to support us reduce cost of funding. And I can, if I mention your name, you know what you're doing is wonderful. And all our local banks that are supporting us in a very, very mighty way. So we have this money here that we've been managing, and this is going towards these projects. Olkaria 5 is started, Olkaria 126 is going on, Olkaria 1 rehabilitation is ongoing, and everything else is on track, and that is the big story. When you come to invest in KenGen, think about the growth. Think about the story. Where are we going and where are we coming from? Where are we today? Are we coming? You will not see a big jump on revenue. I think when you look at it, say how it move, it will be going in a stepwise, because once we put a plant, we sign a PPA with Kenya Power Lighting, it's agreed with ERC, we construct it, 3 years, the honey starts dropping. That's our balance sheet. And as you can see, PPE, not much happened because we are just in the process of the plants. It's a bit of capital work in progress on what we've started. So total assets grew from 367 billion to 377, 3% up, but that will move a bit. And then equity and liabilities, again, as a result of the rights issue that we did, that's where we are in terms of a balance sheet. It's a strong balance sheet. We met all our covenants with financials, and we are very, very happy that we maintain this company and steer it in a very strong and solid company. You can see this balance sheet is not is quite a good balance sheet. And this is our debt profile. It's a bit of a busy slide, but if you can see it, it tells the whole story. The first gross debt by source of funding, what you can see is that 78% of our debt has to do with government, either as on-lent or as guaranteed. So we want again to thank very profoundly our wonderful government of Kenya that continues to support this business. Without them, again, we would not be where we are today. I think we really owe it to the government. Let's give our government a hand. So my director here from Treasury, he really does a lot. So thank you so much. So that's the mix. So from an investor point of view, where is your risk? 78% has the government of Kenya behind it, either as on-lent as guaranteed. So when you're doing all your numbers, please don't look at it and just say, oh, your debt equity ratio is like this, your debt service coverage ratio. Know that our very sovereign government stands behind us very solidly. Debt maturity profile, again, you can see. Last year we had 32 billion in 2015, and because of the swap that we did, the debt equity swap, the conversion of debt equity, that has reduced. So our terms of moving forward, we have a bit of headroom to grow our business, to take more debt, because our maturity profile is quite down compared to what it was. And our weighted average maturity is now 13.8 years, and weighted average cost of debt is 3.36. That's really, again, courtesy of the support from our government and our financials, development financial institutions. I must say that as we speak today, we are working with World Bank, as I mentioned a little earlier, to try to improve on this weighted average maturity. So they're giving us a guarantee of around 300 million to kind of restructure some of our debts. And the objective here is to give it a slightly of a longer tenor, because some of our debt are a bit of short, they're kind of short-ended, and also be able to see if we can reduce our cost of funding as we bring in the AAA backing of World Bank behind our debt. And that's just a bit, so we are working on that, and the financiers in the room know that they have been working very hard and sharpening their pens so that they give us something that can help us and improve the bottom line for the investors. Funding currency mix, much of our debt is on dollar. Foreign currency, Kenya shilling is 9.8%, the rest are foreign. So the next question that goes through your mind, forex risk. Forex risk, that's the question you're asking yourself. I've dealt with the interest rate. I know now you're wondering about the forex risks. The forex risks, our power purchase agreement, again, is hedged, and any forex fluctuation is a pass-through to me and you, but it were hedged against that. So we don't have that exposure. So even though over 90% of our debt is denominated in forex, at the time of signing the power purchase agreement, we fix the exchange rate. And that's not only KenGen, that's even other players in the energy sector. And any forex fluctuation above the PPA exchange rate is passed on, and it's part of our revenue that we have shown. Now, in terms of moving forward, we have got commitment from all these financiers together with our local partners. We are working with JICA, as I've said. They are funding Olkaria 5 with us solely. And we're getting extremely wonderful terms. KfW, we're working on several projects. The French FD, we are working on different projects. KfW, we are working with them, and European Investment Bank, they're jointly working with JICA on Olkaria 1 Unit 6. We want to thank them, and I've said the World Bank. And we're also working with Africa Development Bank in terms of looking how we are currently doing a study to explore the asset-backed security, asset monetization area. It's kind of innovating financing realm, and we are doing some study sponsored by African Development Bank just to see opportunities there moving forward. So these are commitments that we have. So most of our projects that are ahead are completely planned for, and funding is ready. Again, you'll ask me, you're going to take so much debt. As you all know, our power purchase agreement is cost plus margin. So all our cost of the power plant plus all the borrowing costs, including the interest, is added into the PPA, and then we get a margin, which is what comes to shareholders, which is 12.5% after tax. So we are not exposed to that extent, provided our balance sheet is able to meet the requirements. But again, I must say, we are also thinking outside the box. So a bit of corporate debt, but we are also looking, and again, you must have seen as investors, recently we are looking at off-balance sheet projects. And we are doing modular, we are trying leasing, and it's out there, we are in the procuring process. And we're also looking at what's called vendor financing. We are doing a BOT project, which again is out there. And those are to just relieve the pressure on the balance sheet and maintain the headroom in the balance sheet, so that where we have, like, for example, the renewable energies that attract concessionary funding, we can leave that headroom, and anything that can be done outside is done. We're also working with the PPP unit, public-private partnership unit of the Treasury, to again do a project. So all those are innovative financing that we're currently undertaking outside the corporate balance sheet financing. Now, the elephant in the room, I think we need, this thing could have had the title dividend. We chose not to call it dividend. Again, we like to be honest. As I was thinking about this, I remembered my grandmother. She's rested in 2010. Old, never went to any business school, but a very wise lady. When she did the harvest, me and my brothers, grandchildren, we like the better seed, the cob that's big. We like roasting. But my grandmother always looked for those cobs and kept them near the fireplace, because she needed them for seeds for the next planting season. We didn't like it because the better maize, better to roast, was never roasted. But my grandmother, in her wisdom, in the school of business that she learned from the kitchen and from her grandmother, she decided to keep the best for the next season. So what we've decided is not to give you and to give ourselves, because we're all investors, 20 cents or 30 cents or 50 cents, but to keep it. But we are saying, what's happening to a company? Those who invested during the rights issue, they paid 6 shillings and 55 cents. As we speak today, KenGen share has been at 9.5. Those who are wise enough to sell at 9.5, those who are a bit more speculative, the weighted is a bit down. But the last, you are still around above 2 shillings again, which is 34% again. So which one is better? A 50 cents or a growth in the value of the share? Those who started a lot early in the year, they have got 52% increase in their share. And my schoolmate, Moy here was my schoolmate. We went to school, so that's why we are able to speak in this forum. He's aware. He's managing an investment firm. So that we are creating value for tomorrow. And because we have these good partners that at the moment are ready to support us and give us funding to put projects, we are hitting the iron when it is still hot and building value for you tomorrow. Thank you.
The next, we have only 2 slides to just summarize our future story, our growth going forward. And the capacity growth is focused on renewable sources. You can see what we had talked about on the right. Installed capacity of 1631 megawatts. We would like to grow this to 2352 megawatts by 2022. And in the middle there, in the pie chart, we have the projects that we are working on to achieve that growth. Olkaria 7, Olkaria 6, we have Olkaria 1 rehab, we have wellheads, Olkaria 1, additional units, and 4 topping up plants. Olkaria 1, unit 6, 70 megawatts. Olkaria 5, 140 megawatts. Meru Wind Project, 80 megawatts. Ngong 3, another 10 megawatts. And we are glad to report that our growth will focus on renewable. And that's why there will be no movement on the thermos. We will not have movements on the hydro, but you can see we shall increase the wind and the geothermal. The next slide, our business model. We would like to retain our traditional KenGen model, which we are calling KenGen A. That is on the existing mandate and business. KenGen B is the model where we shall partner with others, special purpose vehicles, joint ventures, to be able to implement the power generation business. And then the new exciting one is also KenGen C. This is a diversification story, and we have incorporated a subsidiary. We are working on institutional and regulatory approvals, and that company will be offering services like drilling services, consultancies, maybe industrial park and other business to diversify our business. We do hope at the right time we shall invite you as we unveil our KenGen C company. And behind all this, we have the KenGen people, we have the organizational health supporting this, and going forward, the people story is appearing in the boardroom big time, and so our business will be delivered by our people. We want to thank you so much for being with us. We also want to acknowledge that in our business model, Power Africa has really supported us on that, and we really appreciate. That has been very, very valuable to our business. I want to thank you all so much for listening to us. We wish you well in all you do, and may the door and the wind of possibility swing wide open to all of you as we go forward. Thank you so much.
Thank you very much. Thank you very much. We'll go into questions now. You may have noted that KenGen is going places. So we expect those questions about going places first. But if you have other questions also, we will take them.
My name is Harrison. I'm from CAPEX Africa. Congratulations on your numbers. I want to take you back to where you've been, not to where you're going. I've seen some adjustments relating compensating tax. Kindly shed some light on that. Thank you.
George Obulutse, Reuters News. Just going back to the power capacity that KenGen wants to increase from 1631 to 2352 by 2022. How much will it cost, and how much of it is already secured right now? And then also, if you're able to, there was a slide that had CAPEX for different years that it wasn't clear which, per year, how much your CAPEX is going forward.
Good morning. Once again, congratulations, Guerrero from EIB. On one of the slides, you talked about the social issues, and social investing and social responsibilities become a very important matter today.
Could you just slightly expound a bit more on some of the works and social responsibilities activities you do?
Name is James Gomeli, consulting in the energy sector. I just want to understand, will there be an impact when we switch off the Kipevu thermal power? And secondly, I'm seeing within the next 1 year you'll form an organization that can offer you services. Are you going to deprive businessmen opportunity to do business with you? Thank you.
We'll start with a question by Harrison on compensating tax, then by George on the capital funds requirement for our growth story. John, you can start with the tax one.
Compensating tax, as a result of the investment allowance that we get because of our plants being outside municipalities and to support the energy sector, we get what's called investment allowance. Now, in our books, we have total tax that really has been, we have not paid because of the support from government, over 30 billion actually. Now, when we declare dividend in a year, according to the law, it triggers what's called a compensating tax. And this is really 30 over 70 of the dividend that you pay. It comes around 42.86%. Now, when we paid dividend, which was mainly arrears in 2016, that was triggered. And a compensating tax computed of 2.4 billion on that dividend. We are still discussing with the government because this dividend was paid to the government. According to the law, it's payable, and we provided for it in the previous year. But because up to now, we are still having discussions with the government whether it could be reviewed. We recognized interest on that, which comes around 661 million on that compensating tax that has not been paid. The discussions are moving very well, and the view which has been taken by ourselves and our auditors is that there's likelihood of very positive progress on that regard. But we have recognized that previously there was that compensating tax that's due on the dividend that was paid, and this year and last year, and the interest that has been accrued and penalties is also noted in the accounts. And this is one of the input into the consideration that the board has considered as they were thinking around the dividend story. So that's really the position. The second one is about, which George asked, is about the capacity growth. And the capacity growth that is here, as you note, this is around 720 megawatts, roughly around that number. And we estimate additional cost of around $2 billion that will be required. In terms of timing, in the next number of years, we need roughly around $2 billion. In terms of the funding, as I did mention, this is our CAPEX funding commitment, and I've indicated the years, unfortunately, you can see the numbers and the projects in various colors and the way we have funded. So to answer is that we have largely all the projects that are online are actually, we have funding at different stages. KIPEVO 5 is completely funded. Olkaria 1 Unit 6, there is complete commitment. JICA has already given their monies with us. EIB has signed off their contribution. And the rest, as I did mention, KFW, AFD are all funded. So in terms of what is due in the next 3, 4, 5 years, it's committed, as I discussed. And that's really the purpose of this schedule, of this presentation here.
Yeah, from Kirago, social responsibility, social investment. I'm glad to report that, yes, we generate electric energy. We also generate social and people energy. And so we have a strong CSR policy. We also have a KenGen Foundation. And between the Corporate Affairs Department and the KenGen Foundation, we have programs in place, for example, scholarships. We provide water. We provide health facilities. And recently, with the help of Power Africa, we are also partnering with the communities within where we operate to also bring them on board as partners. We had a program where we have taken some community members from Olkaria to New Zealand to see how other organizations and other countries are partnering with communities and other people to strengthen the social, the corporate investment. And so, yes, we have programs in place. About KIPEVO, yes, the transmission line from Mombasa to Olkaria has enabled us to transmit more geothermal from Olkaria to the coast area. Currently, KIPEVO has been useful because of the drought. And so that's why you have seen in our results we have increased thermal energy. And I think in the immediate future, KIPEVO is still complementing our business, but we are working on strategies of how to continue reducing the thermals as we increase the geothermal and the renewable energy. So will our KenGen C deprive other people's business? No, I don't think it will. It will be a partnership. It will offer services like drilling and consulting. And I think we can only strengthen the business environment and partner with those that can partner with us to strengthen business in Kenya and grow the economy. It will be more of a partnership. And where competition arises, I'm sure it will be welcomed. Thank you.
I know you must be wondering if KIPEVO is out, what happens to revenue. We have, KIPEVO is under what's called a capacity charge rate, which is a power purchase agreement based on capacity. And capacity is determined depending on availability. It's like hiring a car. So when you hire a car and you enter into a contract, you can choose to drive it or park it, but you still have to pay the daily rental charges. So over 95% of our revenue comes from capacity charge. So in the rare occasion that we do not generate units out of it, the component that can suffer is the energy side, which is more of a reimbursement of variable costs. The capacity charge, which is the main component, will remain as long as the term of the PPA exists. Thank you.
Thank you. My name is Gita Ngunyi from People Daily. It's just a short question, actually a clarification, an expansion. John, if you could just open up the World Bank guarantee and the debt restructuring, and if you could be more specific, tell us which particular debts you want to review the terms.
The World Bank guarantee is around $300 million and could go up to $500 million. It's a partial risk guarantee, and there's a component of it on restructuring, and then there's another component that could finance additional, could support additional units, additional capacity. Now the debt we have some foreign loans, dollar loans. Basically, they are debt that we got. They were local, and the interest rates were a bit on the higher side, but they are good loans that support us. As I mentioned earlier, their tenor is a bit short. They are below 6 years, and as I did mention, the interest is a bit high, slightly on the higher side, and the objective is to reduce the tenor, increase the tenor and reduce the interest rate. The total loan is around $124 million. The program is currently under tender, and therefore can't divulge any more details, but the sum total is around $124 million that we are restructuring with that partial risk guarantee from World Bank. Thank you.
Ours is to thank you so much for honoring us, investing time to join us today. You've made our day because we have a full house, and that really matters to us. We thank you so much. We honor you for that. We look forward to seeing you in our other events, or even when you invite us. Thank you so much, and have a good day. Thank you.